What are the real costs of buying your first home? Is it just the 20% deposit or is there more to that? In this video, we'll break down the actual cost of buying your first home. When you think of buying a home, you probably think about the loan repayments, but wait, there are quite a few upfront fees that you need to pay first. Let's say we're buying a $500,000 two-bedroom unit in the outer eastern suburb of Victoria. We have a 20% deposit save up to avoid lender's mortgage insurance. We'll explain that later, and are ready to borrow 80% of the unit's value. The first big payment will be the stamp duty. This is the tax the state government charges when you buy a property. The amount depends on the property's value and other factors like if it's your first home. For first-time buyers in Victoria, there's good news. No stamp duty for homes valued up to $600,000, a reduced stamp duty for homes valued between $600,000 and $750,000. Since our property is under $600,000, we don't have to pay stamp duty. The exemption or concession is only available to you once, and this means that if you or your partner has received the benefit before, you cannot receive it again. On top of that, if the property is new and under $750,000, you may be eligible for the first homeowner grant of $10,000. Next is the transfer fee, a charge for transferring your property into your name. In Victoria, this fee would be $1,256.50 for our 500,000 unit. If you don't have a 20% deposit, you will need to pay lender's mortgage insurance, LMI. Basically, this is an insurance that covers the lender, not you, but you pay the premium in case that you are unable to meet your loan payments and the property is sold for less than the outstanding loan balance. For our example, LMI would be about $16,870, but with our 20% deposit, we avoid this cost. Next, we need to pay the legal and conveyancing fees, and this covers the cost of solicitor or conveyancer to handle the paperwork. This usually costs between $800 to $2,500. We'll budget $1,500 for this. Then it's the building and pest inspection cost. Before buying, you need to ensure this house is in good condition and pest-free. It's typically around $300 to $900 in Victoria for this cost. We'll budget $600 for this. Then we also need to pay the mortgage registration fee. The mortgage registration ensures that the mortgage can be viewed by a simple title search. This fee is around $120 in Victoria. Actually, when you refinance your loan or sell your property, the existing mortgage will be discharged. By that time, you would need to pay another fee called the mortgage discharge registration fee, roughly around the same price. Since we are tallying up all the upfront fees, we'll just ignore this fee for now. Your lender will have the property professionally valued. In Victoria, a property valuation cost can widely vary from as low as $300 to thousands of dollars. We'll just budget $500 for this. Since we have a 20% down payment save up to avoid LMI, and the purchase qualifies for the stamp duty exemption for first-home buyers, we are able to save a big chunk of money for the upfront cost. To tally up, the total upfront cost is $3,989 plus the 20% down payment of $100,000. Now, let's talk about the ongoing cost. The biggest ongoing cost is the monthly mortgage repayments, which include both the principal and the interest. Using Westpac's mortgage calculator with a 6.76% variable interest rate over 20 years long term, the minimum monthly payment is $3,044. If you pay the minimum monthly payment in 20 years, the total interest that you would have paid $330,520, almost as same as the $400,000 principal. Homeowners usually need home and content insurance unless that they live in an apartment under a strata title. This insurance covers repairing or replacing your home and belongings if they are damaged or destroyed. In Victoria, the average annual cost is about $1,940. Another ongoing cost is the council rates, and this is a property tax paid to your local council. The rate depends on your property's value and the council's rate. The average annual cost in Victoria is about $1,800. Then next is the maintenance fees. Maintenance fees can range from big expenses like renovating a kitchen or smaller ones like fixing a leaking faucet. Generally, maintenance costs can be up to about 1% of the property's value annually. For our 500,000 home, that's around $5,000 per year. To sum up, here are the costs. Total principal and interest payments over 20 years, $730,520. Home and contents insurance, $1,940 per year. Council rates, $1,800 per year. Maintenance fees, $5,000 per year. Averaging these costs over 20 years, that's $45,126 per year. Let's add everything up. The total upfront cost plus the 20% down payment is $103,989, averaging over 20 years, that is $5,199 per year. Adding the ongoing cost of $45,126 per year, the total annual cost comes to $50,325 per year. So, by committing around $50,000 per year for 20 years, you end up with a $743,000 worth of unit, assuming a 2% annual property appreciation after inflation. Just a thought, if you deposit the same amount, which is $50,000 per year, into a savings account with an interest rate matching inflation, meaning no real return after inflation, you will end up with $1 million after 20 years. If you have extra cash to manage your accommodation, you'll be able to buy that unit upfront in cash and still have $257,000 surplus. This is because the interest that you paid as the cost of debt to the lender that was working against you. There might be even more costs involved when buying your first home, like a buyer's agent commission. Did you know that there was this long list of costs involved when buying a home? Let me know if I missed anything. My name is Irene. I'll see you next week. Bye.